Hello traders, this is Brian from FinancialTradingJournal.com and welcome to this week's FX Weekly Analysis. Today is Saturday, July 20th, 2013. Just a couple notes before we start. I apologize for last week. I had a family emergency, so I wasn't home to be able to record the analysis. And also, just a reminder, next week will be the last FX Weekly Analysis until September. As I mentioned previously, I don't trade in August, so I don't forecast in August either, because August I consider a holiday month just like December. So when December comes around, that's another month I take off. August and December are the two holiday months of the year. That's when people usually go on vacation. So that's usually when the markets are really slow. If you thought they're slow now, they're even slower during the holiday months. But that's not to say the markets won't move, because during times of low liquidity, whoever is in the markets can easily manipulate the price. So they can just cause huge spikes. But since that's random, I don't like forecasting that, and that's why I don't like trading during the holiday months. So anyways, let's get started. For the dollar CAD, the monthly chart is red. We are currently back at the open of last month's candle, which is right here. So that's interesting to note. I didn't think we would actually pull back this far, and we're currently also at the weekly trend line. We did break under it. I don't see price staying here that long. It's either going to bounce up, which I think it will, or if it does continue going downwards, then the projected areas are somewhere in the middle. I'll mention that when we get to it on the 4-hour chart. But if that doesn't work, then the other level that it could go to is the lower weekly trend line, which I really don't see happening, because that's beyond an actual retracement. At that point, it's a full reversal, because that would be effectively the bottom of last month's candle. That would be a full reversal. So it would be a matching candle. That's not a retracement. A retracement is up to the 61.8 level, which is somewhere in the middle here. So when we get to the 4-hour chart, you'll see that. Onto the weekly chart, as you can see, it did break below last week. Well, obviously I wasn't forecasting it, but last week I would have mentioned that it broke below and the possibility of would it bounce or would it continue going down. This week we did continue going down. We tried to break above it as well, but we did not make lower lows. So that's a good sign going forwards. We didn't break last week's low, which was at the 1.032 level. This week's low is pretty much where the market closed, around 1.0365. We're about 40 pips above last week's lows. So that's a good sign. But that is the potential target, as we'll get to on the 4-hour chart, which is where I draw the fib line. So this is the daily chart. Daily chart, this is a fib line, and this is what I'm talking about, a retracement. If it retraces, then it'll go to the 61.8 or the 78.6. A full reversal would be all the way back down to the 100, which is where the weekly trend line is. I don't see that happening. We still have upward channels. This red line up here is a new top channel line. I just created a parallel line down here, so this is a projected trend line. We're hoping to see price bounce around here, which I'll get to on the 4-hour chart. And then we also have the old aqua trend lines as well. And this aqua line is real, unlike the red one, which is a projected line. So these are levels of concern going forward. Otherwise, it would have to break both of these trend lines and possibly break the 78.6 fib level to get to the weekly trend line down here, which is why I don't see it happening. So on to the levels I was talking about. The projected red trend line is coinciding with the 61.8 fib level right here. So on a 4-hour time frame, we could get there in the next 2 days. That's the first target. Alternatively, down here, this is another level here. This is the aqua trend line. This is below the 61.8, but this is also a resistance / support level, which is the red line here. It was drawn from way back here, from right there, that top there, and the bottoms here. So that's a potential level as well. Either one, but between these two, this is 1.0315 and this is 1.028 or 29. So that's only about 25 pips difference. So it's quite a small loading area, so only 25 pips. So that's where you might be looking to load longs, and then your stop loss would be below here, because if it does break below here, then it's going to go straight down to the weekly trend line, which is all the way down here somewhere. I don't have it drawn on the 4-hour chart. So that's it for the dollar CAD. Up next we have the Aussie dollar. So as you can see, we have a green monthly candle right now, and currently it looks like a doji. But this doesn't mean anything. We have 2 weeks left or a week and a half left before this month closes. So until then, it's too early to tell what's going to happen on a longer time frame. So moving to the weekly chart, we had an interesting close last week. I wasn't able to forecast it, but last week we had this doji candle here. I don't remember the nickname for this thing. I think it's called a gravestone doji or something like that. But there is a name for it, where you have a long upper wick, a short lower wick, and a doji. There is a name for that. This is not a pin bar. A pin bar would require a body. This is closer to a doji. But anyways, that is a possible reversal candle type scenario, where if it found at the bottom or top, then it could reverse, assuming you have confirmation in the next candle, which we did have confirmation this week with a green candle. However, I don't really like a reversal play, considering the long-term outlook on the Aussie. As I mentioned in previous weeks, we're headed down to the 0.8 level, or below that we have the 0.7 level. So I don't really see it reversing. Plus, considering the past 2 months or 3 months of downward candles, every time we had a green candle, it was followed by a red candle. We had it here. This is a green candle, and this is where it broke outside of the monthly trend line, followed by reds. We had this green candle a couple weeks ago. I mentioned it was in no man's land in between these two lines, followed by more red. So now this is a green candle. So now the question is, are we going to continue red next week, because that would be continuation, or do we start to get green candles from now on? And then that might be a reversal. But as I mentioned, I don't see a reversal in play. Possibly we might get a retracement, but it's too early to tell. Possible retracement levels would be here in these two lines in no man's land. But that's it for the weekly chart. So on the daily chart, as you can see, we're still stuck inside the daily channel. I redrew the top trend line so that it would connect to these two highs instead. I believe previously what I had was I had a parallel line to this one, which would be cutting into the candles here. So this is the top upper bound, I guess, is a better correction for the trend line. We're still stuck in between the two trend lines. As you can also see throughout the past month, since June 20th, so it's been a little under a month, we've been just consolidating within this range here. So as soon as we break outside of this range, that will determine the new direction. Either we go up, possibly to retracement levels up here, or we break downwards. But for now, it's still in the middle of the range, because if you were to draw a box from right here down to here, this is pretty much in the middle, 50%, as we'll see on the 4-hour chart. So on the 4-hour chart, I have drawn a different 4-hour channel, because we didn't fully touch the aqua lines. The aqua lines kind of stopped being in play as of right here and as of up here. So here we have this smaller red channel, H4 channel. This trend line is drawn there, parallel line drew it up to there, and then currently we have this trend line here as well. Playing the channel, we expect price to break downwards, but considering that this is a symmetrical triangle, it can go either way. To the upside, we have the aqua trend line, which is where bears might start loading shorts, or even up to here, which is the levels I mentioned in no man's land. That's where potential levels for shorts as well. Otherwise, on the downside, as I mentioned, long term, we're going down to 0.8, 0.7, so it's going to get there eventually, right? The whole thing about Forex and anything in finance, for that matter, is you know the target, but so the destination is important, but the journey is also important, and the journey is the hard part. Everybody knows where things are headed in the next year, but the question is, can you get in the position where you don't get stopped out, so you stay until the end, or do you get stopped out in the middle, or do you pick a bad position in the middle? So we all know where it's going. Like, most people know where things are going. It's just they screw up in the middle, and that's the biggest problem in Forex and in any asset where you can lose your position if you don't have enough to cover it. So that's it for the Aussie dollar. Up next we have the euro dollar. So on the euro, monthly chart's kind of weird. We have a green candle again, and this is after last month's pin bar slash doji, although that's more of a doji because the body's so small. This long upper wick there, now we have a long bottom wick, so that just shows that price is still ranging. The traders have not decided whether to go long or short on this pair yet. So right now it's just for scalpers. You just go up and down, basically. You just range trade rather than trend trade. Nothing else to say there. You should take a note The weekly trend line though, I just drew this one connecting that high and that high. So anyways, let's just zoom out to the weekly chart. So if we do continue up, we should get it stopped somewhere around there. Otherwise, on the way back down, we're hitting this bottom trend line again. Like I mentioned, this is basically the bottom line here, and the top line is this range here, with the exception of this spike upwards. We have basically a box between here to here to here to there. This box right here is where we're stuck in, and we've been stuck in here for 5 months now. So going to the daily chart, I have drawn a fib line and a symmetrical triangle. The fib line is just to point your attention to the 61.8 fib level, which is right here. We did manage to hit the 61.8 fib level last week, and we did it this week as well. Last week was just a huge spike, and then it went down immediately. This week it went up to that level, and then it went down in the next candle, not in the same candle. And then towards the end of the week, we're still edging towards that level again. And this is also the top of the symmetrical triangle, as we'll see a better version of on the 4-hour chart. So this is the 4-hour chart. As you can see, price kind of tended to go upwards, but we do have this lower trend line as well. It's descending, as you can see, from high there, lower high, and then here we had a low and then higher lows, and then we're trying to see what happens here. So there are 3 things in play here. The 61.8 fib level, so that's a possible play for downward movement, because this is fib retracement level. So if this level holds, then we're projected to go back down. Now we have a symmetrical triangle as well, but that's a neutral pattern formation, so that one has no say. But here's the problem: we also have a flag in play. This is a bullish flag. This green upswing here is a flag pull. Symmetrical triangle is the flag. So going forwards, I don't really know what's going to happen. We have conflicting signals, as I mentioned. We have a flag and 61.8 fib level. Which one is stronger, the fib retracement level or a flag? But the flag is occurring within a lower downtrend. So like I mentioned, the weekly trend line is up here. So even if we do go up, we're capped around here, and we have to break through the 78.6 level as well. And this is around where people will start loading shorts. As I mentioned in previous forecasts, the 1.3341 level, which is right around here, is actually near where price would hit the trend line, assuming it goes that fast. Like if it goes like this right here, a steep upswing in the next 2 days, then it'll get there. Otherwise, lower, depending on how fast it gets there, then it might get there around here. And if you were to zoom out, then it would take quite a while to actually hit that cross. This cross would never happen probably, because this would be about 2 weeks to get there. That's a very slow action, but considering it's holiday months, it could happen. But up here, the 1.3341 level is a level of interest up there. So that's it for the euro dollar. Lastly, we have the pound dollar. Pound dollar, interesting monthly chart as well. We have a pin bar / doji, just like this one over here. This one was a long bottom wick. This one is also a long bottom wick. While last month's candle, we had a long upper wick. Interesting stuff. So we have 3 pin bar / dojis now on the monthly time frame. The only difference is we have 1.5 weeks left in this month. So the question is, does it stay like this, or does it continue going up, or does it go back down? That's the question. So moving on to the weekly chart. Weekly chart, we did manage to break back inside of the flag. As I mentioned, this was the bearish flag, and we managed to break back inside of the weekly channel. So there are 2 ways to trade this. This basically, on one hand, it voids the bearish flag, and on the other, if it does void the bearish flag, then the people who trade channels, basically they had buy stops inside of the channel lines, and they're hoping for a continuation play all the way up to here. That would be conflicting on the monthly time frame, because that would signal that we're going back up. But even if we do go back up, I don't see it going very far. As I mentioned in the forecast 2 weeks ago, we made a lower low here. So a lower low means that trend is changing. So we were expecting a lower high as well. So going forwards, I'm expecting a lower high. As long as it's below the 1.57 level, then that's a good lower high. It would be even better if it was lower than the 1.56 as well. So possibly somewhere here, a lower low would be great. And this, I believe, is around the 61.8 fib level as well. So moving on to the daily chart. So I was right. The 61.8 fib level is right here, 1.5392. We're currently at 1.5281, so that's about 110 pips away. This is the 50% fib level. So this was a level of interest this week. And as you can see, we've been pretty much going up for the past 1, 2, 3, 4 days. And price action is getting constricted now. So you saw how there's bigger movements down here and smaller movement up here. That's a wedge, as I'll show you on the 4-hour chart. But right now we're stopped at the 50% fib level. And usually when you have a wedge, it can go in either direction. So I'll just show you that now. 4-hour chart. So this is the wedge I've been talking about. You saw the big movement here, and then get smaller and smaller and smaller, constricted over here at near the tip. So now, given low volume, there's a possibility of it just continuing being small and just go sideways. But otherwise, we have the 50% fib level as well. So possible plays is it could go down. So if you're combining the 50% fib level plus the wedge, it can go back down, and this would effectively be that lower high that I'm talking about. Or if we do go upwards, I expect price to be stopped around the 61.8 fib level, and that would be a great place to stop, because that's well below the 1.56 and 1.57 level. But if it does continue going back up to there, the 78.6 level is also at the 1.555 level, which is below both the 1.56 and 1.57. So that's a good level as well, but this one is better, the 61.8 fib level. So I could see it going up to there and then going back down, or it can just go straight down from this point onwards. But that's it for the pound dollar. So that's it for this week's FX Weekly Analysis. Hope you guys enjoyed it, and I will see you guys next Saturday for the last FX Weekly Analysis for this summer before coming back in September.